Hi, and welcome again to another edition of Market Analysis for today, February 12th of 2025. I'm Gio Benacourt. This is a recording about an hour prior to the U.S. session market open by Vantage Markets. And obviously, I wanted to let you guys know that you already know perhaps, for the ones that don't know yet, we are a proud partner of Ferrari. So you're going to be seeing our logo on Hamilton's and Leclerc's Ferrari Formula One car. All right, that's something I want to share. Anyhow, let's get into business. So we just came out receiving the CPI number, and that came out hotter than expected, 0.5% versus a 0.3%, and we're seeing that fluctuation, sell-off in the indices. So this is obviously a reversal of, actually, it's been within range, a wide range, indeed, but due to this harder than expected, all right, because 0.5, it was expected to be as the same as December's. Okay, but this is for January, obviously. So, and over a year, new administration, so inflation just went up 0.5%. So that right there obviously is making the dollar index. Let's take a look at the dollar index. What is it doing? It's spiking, because obviously that brings to notion that even though the Fed, which will be speaking later on today, says that they will not deter from holding off on cutting rates, and this number will not even also imply or put any pressure on them. Their preferred metric is this BPI, which will come out later on the week. So far, we're seeing that the dollar index is rallying, because obviously it tells the dollar is increasing valuation, meaning that more investors are gonna buy the dollar, invest in dollars, hold dollars, because of the interest rates that are gonna be standing so far uncut. So still receiving that 4.25% it is. So let's see today, how will this affect the rest of the market? So jumping into gold, we see that gold yesterday, it by $8.8, it didn't reach that resistance of 29.50. After making that nice movement to the upside, it retreated and closed in the red, and today is continuously with this momentum to the downside. But however, one thing that I want you to take a look, and perhaps you can investigate later on, is that let's say, for example, in previous sessions when the CPI comes out and it's harder than expected, and the dollar index makes a parabolic movement that it's not really making it right now, because it's not that prolonged, but it is moving into the green, you will see the opposite effect on gold. But it's not. I mean, what I'm trying to say is this candle open at 28.98, and so far the market is at 28.68. So that's about a 30-point difference, right? And then if you take a look at the dollar index, this candle opened at 107.86, and the market is at 108.34. So that will make it right about almost about 50 points that it has moved. So there you go, 30 to 50. So far, what I'm trying to say is that the movement that the dollar index is making to the upside, the gold is not making it to the downside, because it usually has an inverted correlation between them two. So that means that there's obviously a lot of positioning in gold, holding off these values around this area. Okay, I have my second level of support at this previous, what was a previous high, then it turned into a support, and when the market had made a nice movement to the upside, it made almost reach 29.50. From here it retraced, so broke my first level of support. So I'm gonna still leave that one there, and I'm gonna choose this previous low, okay, as my level of support. Now I'm gonna stick to the level of resistances. Initially, 2,900 obviously is the first level psychological value of resistance. Then you have the upper Bollinger Band as a second level of resistance intraday, if you will. So, but I'm going to hold on to these levels right here so far. Now, obviously, the demand for gold is still there. It's going to be, obviously, it's not going to go away. And so we'll see that gold is a long-term investment. So let's take a look at the other indices and see how they're doing. At least, also the S&P trading lower, tanking. Let's see how will this be taken when the U.S. session opens. Crude oil, yesterday it picked its head above that first level of resistance, but it didn't really held. It retreated. Now it's trading below that 50-day moving average that would have acted as a dynamic support, but it's trading below that. So let's see, $72 will be where crude oil will find that support. Then we have Nat Gas. So Nat Gas is also trading higher. Let's see. Look at that perforation of the resistances. I'm still gonna leave them there again, because even though they were violated, they weren't broken. So I'm still gonna leave them there. The 20-day moving average within the Bollinger Band is acting as a resistance anyhow. So let's see if we can obtain more momentum to the upside and continue and see if we'll be able to close above or at least revisit that high from yesterday, which is basically what I'm thinking. I already spoke about gold already. Let's see where that has it found its bottom now. This has been a good level to retrace or to do a reversal as it's doing so far. Is that reversal sustained? You can obviously break it down and go into a half an hour, 5 minutes charts. You see, silver. So we have silver, and again, silver today it opened with a gap down, has been closed. So let's see if this momentum of the dollar index will continue to put pressure on silver, because obviously importers and whatnot. So let's see what happens with that one. I think that's a tricky one right there for today. So copper sustaining itself right around, so basically a triple bottom at this moment, in a triple bottom, or no, at this moment. So let's see if that's enough for it to come and fluctuate above the upper Bollinger Band towards the highs in the open. So let's see if that will be the case. I don't think so for today, because of the dollar index pushing higher. So Bitcoin is dropping. Let's see if the 50-day moving average, where basically is where I have also my level of support, will find those buyers and then reverse this movement to the downside. Even though it did open with a gap up. Let's see, this one closed at 96,376, and this one opened at 96,377. So it opened tiny gap up, but that's not much of importance anyhow. Then we have the currencies. So the currencies they did close above our first level of resistance. So it also been broken, even though now it's trading below. So let's just leave the second one as where it's at, and let's just use that prior swing high. And as for, let's use the lower Bollinger Band, and let's continue to live this here and see if it'll be able to sustain above 103. Let's see how much more pressure the dollar index will put on it. Then we have the pound, also looking to sustain above itself about 123 and a half. It couldn't, well, actually 124. Let's see if it fluctuated back above the 20-day moving average. But with the pressure of the dollar index that is experiencing right now, I don't think so. So here it is. Let's see how much higher will it push the dollar index when the markets open. I mean, the markets could also just reverse completely the whole movement and come and say, okay, those sellers could also be profit taking, FOMOs then coming in and driving the market higher. Let's see what happens. You never know. But so far, the market, pre-market, well, this is the London session. If it's in red, most likely when the U.S. opens, I will say the will also continue to be pushing to lower. So 21,400 is a nice round number, psychological number. Then the lower Bollinger Band, which is basically where I have also my level of support. I just fix that. And then you have the 50-day moving average. Will it drop all the way? We could. You never know. Just like look at this big old candle here. Anyway, that's it for me today. Have a great trading day, and I'll see you tomorrow.